Good morning, traders. It is 8:02 a.m. Chicago time, May 29th, 2014. It's a Thursday. Thanks for joining. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, a quick run of the overnight activity. Just to see if there's anything that could drive this market. That's the whole purpose of it. Really not much out there. Lots of chatter about Ukraine between the U.S.'s Secretary Kerry, the German and Russian foreign ministers talking about ceasing military action. There was I think it's a helicopter or an airplane that was shot down, a Ukrainian one that was shot down by rebels yesterday. The Swiss National Bank is expected to cut deposit rates to negative if the euro Swiss pair falls to 1.2. It's important for those of you looking at forex pairs. That came from the IMF as well as UBS. U.S. GDP annualized came out at 730. Central about a half hour ago. Q on Q. Came in at negative 1% versus negative 0.5% expected, so a little bit worse. Initial claims came in at 300,000 versus 318, so better. Continuing claims came in at 2.631 million versus 2.650 million, which is slightly better. Also, yesterday, Stanley Fischer was confirmed as member of the Federal Reserve. They still have 3 seats vacant, believe it or not. Without Stanley Fischer, the 7-member committee only has 3 members. So now with Fischer in, they still have 3 seats vacant. And I think they're nominating someone for one of the seats here fairly soon. Someone who worked for the Secretary of the Treasury. That's it for news. The rest is just slim pickings. There's nothing there. So I don't expect it to drive market behavior today. Looking forward, 9 o'clock Central, pending home sales expected at 1% month on month and negative 8.8% year on year. Again, that's at 9 o'clock. At 9:30, EI natural gas expecting 111 billion. And then at 10 Central, crude oil inventories at 250,000, distillates at negative 200,000, and gasoline at plus 250,000. At noon Central, there's a 7-year note auction for 29 billion. Looking at tomorrow, we have U.S. PCE core, U.S. personal income and spending, and Chicago PMI, as well as University of Michigan confidence final. That ends the week. Speakers Lacker, Plosser, and Williams tomorrow. And also don't forget that tomorrow we have end of month trading for May, so the close might be interesting. Let's look at the charts. Let me pull up my charts. So quick look at yesterday, just to answer the question of what have we done. Yesterday we had an open auction out of range opening type. The opening swing was 1050 down to 0750. The market turned around, put in a higher high by 4 ticks or 1 point here at 1911.50. 1911.50, and then it had a large rotation down through to 1906, pulled back to the mid, finished that impulsive move down, and then it just corrected. We have a range extension down. In other words, we broke the IB downwards, so it looked like the down move would continue, and that was the primary hypothesis. If I pull up my notes on the primary hypothesis yesterday, expecting early test above 1910 and then rotate down to 1906 quarter to 1906 is what I said yesterday, what I shared with you. Bulls in control, so stronger positions are longs against lower levels. So stronger positions are longs against lower levels, and this is a lower level here, 1904.50, and lo and behold, we get a 6.5 point rotation up right through everything, right through mid, right through the OS, and back up to the IB high. At that point, we had a double IB high, so we have a stat for that. The probability of breaking. Pull back to the VWAP, not quite to the mid. Another test of the IB high at 1150, and then it finally breaks, but only by 4 ticks again. Pulls back, lower high, and then corrects itself back into the middle of the opening swing. Yesterday was pretty much a non-event. Pretty much a non-event. It really is. There isn't much to say about it other than the fact that it put in a higher high, higher low. It moved value slightly higher. It moved the point of control slightly higher. But note that the point of control, the most traded price here yesterday, is inside of the prior day's value. This is one of the hallmarks of balance, of a market going into balance, right? Even though the value area that we put in yesterday is higher than the value area we put in on Tuesday, the point of control is still inside of value. The market's seeing value and trading inside of these prices, okay? So it looks like short-term balance is kicking in here. The 2-day combined point of control, so because it's a 2-day balancing market, so we have basically a gap, and then we traded 2 days and we have balance. So now we draw a new, what I call, micro composite profile, and that's what this is in green. And what this is showing us is the volume at price of those 2 days that I have encircled in this dashed green line. In that, we start to see, okay, where the trading really happened in these 2 days that are balanced. And what we see is 1908 is the most valuable price in the 2 days. So I'm watching that carefully. We're currently trading at 1911.50. We have an MC low volume node, a composite low volume node at 1910.50, which again was yesterday's OS. And other than that, we have a pretty secure looking low, a nice taper on the low, and then a decent looking high as well, a pretty swift rejection yesterday of the high, a second attempt. So very, very balanced profile for over the 2 days, okay? So the market's basically resting, digesting prices. The thing that really is interesting here is that even though we put in a higher value area, higher point of control, higher high and higher low, look at the delta again. The delta seems to be telling us that there's a churn going on. There's this continuous turnover, but the turnover is not initiating higher prices yesterday. It's the movement lower brought in a lot more volume than this move up. So if you recall, there was a 6.5 point move up yesterday, right here. But that 6.5 point move up, which brought us within 2 ticks of the high, it happened on pretty lackluster volume. It happens. It seems to happen on more. If you think of a battlefield with two front lines battling each other, you would have a stronger battle when those 2 lines are aggressively fighting each other. It's what we see here is what looks like one side kind of just keeps walking forward and taking territory while the other side is just swiftly walking backwards. No fight at all from the sellers is what I'm saying. There's no real volume going off, lifting those offers, and so we have a big move up on really pretty lackluster volume, but then as soon as the market turns down, you have this strong hitting on the bid that occurs, which gives us a negative delta. This story continues from the beginning of the year, and here we are approximately 60 points higher, and so it just continues this way, and it makes it very difficult to really read the auction because it is not a an aggressive auction on both sides. It's a lackluster. It's like trying to read someone's mind. It's a lot less explicit than when you hear the words of what that person's thinking, and that's what the market's doing, and that's what the profile is to me. The profile is a conversation that the market's having with us to tell us, yes, we traded these prices, and this is how much we traded at the various prices. This is what the auction did. And what we've got here in front of us is something more like getting passive-aggressive clues as to what the mood of the market is. And so it makes it a little more difficult, more challenging. However, the key element is still in place here. Don't mind all the colors, those are just my measured moves. The key elements are still in place. We still are in new high territory. We're still one-time framing up. The overall long-term trend, intermediate-term trends are still strong. So I'm going to repeat what I said yesterday, and that is bulls are in control, so stronger positions are longs against lower levels. Okay? So with that being said, my primary hypothesis for today, which actually is being played with right now, or playing out already. I was expecting an open inside of yesterday's range, so I expect this to pull back a little bit into the open. I expect an open auction in range, a two-way trade, choppy trade, a little bit like yesterday, where two sides are actually interacting in the market. I expect the market to initially continue to explore higher, but this may not be the case anymore since we took out the high, since I've written my my hypothesis. Why? Because earlier the high was at 1912 and it was a double top with a very poor high. And so the expectation was for this to push through and challenge yesterday's high at 1250, and it's already pushed to 13. So it took that away. Continuing to explore higher, seeing heavy negative deltas, it remains up here, so there's inventory turnover rather than initiating behavior. Expecting new highs and then more of yesterday's action. So I expect this to chop around on the open and then start to take an upward skew, pull back probably to the expected pullback price is 1910.50, and then I expect it to chop its way up through to 1913. Next measured move up I have is 1915.50, which comes from this triangle here, from this measured move. Oh, I can't select it for some reason. There it is. For this measure move here, gives us 15.50. Next one up is 1922 from this measured move, and so on. And I remind you, 1938 is the key target above in this area. Okay, so that's what I'm looking for today early on. If not, then since we've taken care of that poor high overnight, the secondary hypothesis, which is now more probable, is an early test of 1913 and through, and then a push lower, a bounce off of 1050, a lower high, and then a pullback into yesterday's range for another day of balance. Given that we had a neutral day yesterday, we were closed in the middle, we may get another a second day of balance. Neutral begets neutral in general. So that's what I'm looking for. I'm looking for the market to trade on both sides of the IB. So I'm looking for the second hypothesis to be stuck inside of yesterday's range after an initial test higher, fall back in, and then trade inside of yesterday's range and do more of what we had yesterday, build more energy, make this composite profile fatter for the next leg up. Okay, don't forget, we still have our gap below at 1903.50 and 1899 quarters, a gap zone, just like we had last week, and ended up filling. And again, I'm keeping an eye on the overall delta, which does not look like the buyers are here, but they're not very aggressive. If you look at the monthly profile, just odd. Here's the monthly profile for May. We've spent most of May in the 83 to 61-ish area. Broke through this LVN here at 1886.50, which was a number that we were watching for some time. got to the other side, and then all of a sudden we have this gap up, and we're sitting up here. This is just an odd structure for new highs. This is not how a normal new high structure looks. So very suspect, but I want to remind everyone that that's not a cause for getting short and stubbornly short. There's nothing here that tells me, yes, the market's done. And if you're in the business of picking tops, then the market's going to be in the business of picking your pockets all day long on a trend like this. You might be able to recoup losses on a correction or on a large rotation lower, but overall, the edge is just not there. Overall, the way I see it, I see we have quite a few swing traders here at stage 5. I see overall they're net negative in their account substantially, and it just does not make sense. I would want to see the market actually fail. I don't care to catch the top of the move, but if I can get my hands on a short once it fails, I will let that run and trade around that position if I can. If I have the opportunity to. But I don't see the signs that I'm seeing here as, yes, this is pretty much done. You're basically trading your opinion as opposed to trading the facts that the market are sharing with us. And I see a lot of conversation about this on Twitter and various blogs and so on, that there's a substantial argument about why this should not go higher, and the words like should, will, must, needs to are being used liberally, and to me that spells trouble. That's no longer trading. You're simply imposing your will on the market, and the market does not care about your account. It does not care about your will. It doesn't care about how you feel about what the economy is doing and so forth. It's about trading against other traders or with them, and controlling your need to be right. We're not in the business of being right. We're in the business of seeing what the market's doing and going along with it. The best analogy of what we do is probably surfing. We cannot create the wave. We're too small, unless you're a fund and listening to this, which I doubt. We cannot create the wave. Our job is to read the ocean, look for the ripples that might grow into a nice big pipe, start pedaling with it, put our board in the direction of the wave, start pedaling with it, stand on our board, and enjoy the ride when it happens, always having risk in mind. So those people who are insisting that this is overdone are essentially saying that they want to create their own wave before they can surf it. I don't think that's possible. The ocean is just too big, just as the market is. Here's my fundamentals chart. This top pane is the SPX, the S&P index. As you can see here, we're making higher highs as we go along. However, the 52-week highs are still following this downtrend line as we push higher. The 52-week lows, are not turning up. They turned up just a little bit on the selling days a week ago, but they remain pretty flat. The 52-week lows right at 164. No, not 164. I'm sorry. The 52-week lows right at 4 actually, out of the universe of New York Stock Exchange stocks. Very, very low. I'd like to see this turn up. I'd like a correction, but the market's saying that it's continuing to grind higher. As they say, it is a pretty dull market. The market, and those are the conditions where people get sucked in and stopped out, which causes prices to move higher, which sucks more people in and stops them out, and the cycle continues. Put-call ratio is not telling us anything. It is trading within its first standard deviation, so there's nothing there. Another thing I want you to note is, again, we have a very low overnight session. 133,000, it's 8:21, we have 10 minutes to go. We're approximately 40% light on volume again. Yesterday our volume was very, very light, approximately 30% of the normal volume. The day before was about 40%. Right now the overnight session's at 40% of normal volume. So this is almost like a week-long holiday, and we're trading in the middle of it. So be cautious, be patient. It's very, very hard if you are someone who is more likely to react emotionally or get your emotions get the better of you. It's very easy to get sucked into doing something rather than sitting here and waiting for nothing to happen. However, that is your job. It's like being in the Marines. You train hard and you're ready for action, but you have to kind of sit around and wait for something to happen before you're deployed. And the same goes for your trades. So good luck with that. Just be patient. The markets go through these periods. This is just a part of a cycle. The market goes into a quiet period before it goes into imbalance or an explosive period, and our job is just to sit, wait, and watch, and be alert for when that happens. Good luck.